Good evening, everyone. Welcome. It is Sunday evening. It is the 10th of January 2021. I'm having a look at the global indices, starting off with the Dow. So this is interesting to me. I do think it's overextended on the monthly. I feel that that weekly candle is nice and bullish, so that I don't really have an issue with at all. I think we're kind of nicely above 30,000 now. The daily looks, just in terms of recent cycles, the daily looks a little bit overextended, but not dangerously so. So my only concern is potentially that we got this kind of bearish divergence creeping in. This isn't, look at the Dow, speaking about the Dow individually, it looks fine. Pullbacks into the area, I'm going to be looking for buy opportunities, and I'll assess closer to the time. So generally speaking, just to reiterate, generally speaking, I know at some point in the next month or so, potentially there's going to be a larger correction. But for now, it actually looks okay. It actually looks okay. It doesn't look that it doesn't look. I'm not too concerned in terms of the daily and weekly. It actually looks fine. But just keeping an eye on some of that bearish divergence. Then if I have a look at the S&P, for example, S&P is absolutely, if you kind of look here, it just looks as though there's bearish divergence. It's a little bit flat on RSI. That's fine. Again, that weekly looks really good. Same as the Dow. It is now absolutely entering overextended territory on the monthly. And so again, I'm going to be a little bit cautious with these. The Nasdaq, generally being the most bullish of the bunch. Now, there's no doubt here that there's bearish divergence on both of these. We've now got yet another fresh high, but we've failed to break higher above this flat level that I've drawn in on RSI. MACD is also heading lower. So although the price action on the weekly looks nice and bullish, that looks fine. The monthly looks okay. The monthly, of course, as I've mentioned in previous videos, is already in overextended territory. I might as well just focus on the shorter, medium term and shorter term charts at the moment. But this implies to me, although it isn't necessarily present in the price action yet, that the market is exhausted. So what I would be looking to see over the next couple of weeks is signs of failure in the price action. So I'm not going to take action just yet, meaning I'm not going to be looking for shorting opportunities. I'm not going to do anything crazy. I'm not going to go counter to the prevailing trend. The momentum is still to the upside, but this exhaustion is starting to show itself here, and therefore I would anticipate reasonably at some point in the kind of next 5 to 15 trading days, there's going to start to show some rejections, a lot more rejections, and potentially some failure in price action. If that's the case, if this weakness, this exhaustion is indeed going to show itself, I want to see it reflected in the price action. But taking that, putting that aside for the moment, the dailies and weeklies look good. They look bullish. This is often how it is. The market can be the most bullish that it is until it kind of runs out of steam. But that appears to be the case. They all look, and so what that means in practical trading terms is that I'll look for. It just means that, I'll definitely make sure there's a stop loss in a reasonable place. I'll make sure I've recalculated my risk. I might reduce my risk. Instead of 1% per trade, it might be 0.5% per trade. So I'll just take into account, and I won't be offended if the market decides to suddenly fall through the floor, if that's the case, if that's going to happen. And so it just means I've included the possibility, and that isn't always the case. Once we have this larger correction, or just a big correction, not a larger correction, once we have a big correction, then I'm going to be less concerned about that. So I know we have to have it every few years, and if we can let off a bit of steam, then I'm going to calm down, and then I won't be as concerned about it. But because I feel that we have gone a bit parabolic in price action and we are overextended, I just want to see a bigger correction to let off some of that buying pressure and then pick up from there. So then having a look at the Russell 2000, of course, it's just continued on. That is also a little bit flat on that RSI, a little bit bearish on the MACD, starting to show a bit of that exhaustion there. Also, there's a larger candle that's now shown up, but we've broken past 2000. Okay, so again, shorter term and medium term look nice and bullish. They look great, man. But that monthly is starting to stray very far away from the moving averages, and it is. I mean, the question is, would I consider the longer term, bigger picture across some of these, things like Bitcoin and Tesla, as well as Apple looks a bit better now, but Tesla, for example, and a couple of the indices, would I consider them overbought in terms of the bigger picture? Yeah, absolutely. Undoubtedly. I don't want to be one of those people that's talking about it for 6 months and eventually at some point it's going to be right. I'm saying that at this point now, I find a few of these things are now in dangerous territory. Whether they continue up for another week or another 3 weeks is irrelevant to me. I find that at this point in time, it's now above a certain price based off its behavior. It's dangerous for me. The FTSE, now this is where it gets kind of interesting to me, although this might be impacted by a reaction in the US because we're all sensitive to what happens in the US economy. We can have a reaction there, but separate from that, I would say this looks fantastic. It really looks nice and healthy, and I haven't said that for a while. I've been more bearish on the UK most of 2020, but we've gone into a nice uptrend. We've broken through 6.3. We're back over that level. That to me is a nice positive sign. And the daily, although it's, in terms of its cycles now, it needs to do a bit of a pullback. I do think overall this is in a much kind of healthier state compared to them. It has, you can see here also though, that it's still a bit flat on the RSI and a little bit more bearish on the MACD. The DAX as well, pretty flat here. The last bit of that MACD is starting to trend higher. RSI is trending a bit higher. That monthly is broken above 13,000. It's broken through that level of resistance. I'm very happy to see that. I want the markets generally to be bullish. So it's not as, because the US markets tend to have been stronger the last year, they might well be due for a correction, but the other markets are sort of playing catch up and they don't look as bad. I guess that's the best way to phrase it. Even looking here at the French CAC, that's now done a pullback, broken back up above, found some support. Overall, it looks pretty cool. Again, you can see it's definitely still below this kind of key level, but in isolation, looking at this high to this high, it's trending higher. And so, relatively speaking, it actually doesn't look that bad. Looking at Eurostox, so Eurostox trending higher. It also looks a little bit better there on both MACD and RSI. Here, it's also looking pretty good. Again, breaking above these. So I'm happy to report that and see that they've started to break free. Outside the US, some of the markets have started to push to brand new highs in many ways. Okay, now, so if, for example, the Nikkei had a fantastic breakout, but this is now starting to enter, especially as it goes towards 29,000. This is going to need at some point to have a pullback. That weekly looks okay, doesn't look so bad. The daily has gone a little bit parabolic for my tastes. But yeah, and at some point that's going to have a bit of a pullback. So I think certainly as soon as price starts to break through this area, and I'm just going to mark that if I do find the price kind of breaks below those, then I think it's fair to say that that's probably going to be that larger correction coming back down. And finishing off with the ASICs just trying to push through on its own. Actually looks pretty good there. It hasn't broken free of this consolidation, but I think it's potentially likely to do that, and it obviously looks like it wants to hit back up to 7,000. So that's pretty cool. I mean, it just means that the markets are not necessarily inherently weak, but overall they still look pretty good. Going to take a quick look at Tesla. Of course, that's just absolutely crazy. When that correction comes, it's going to be a bit of a shocker, but it'll come back down towards 600 into that area. Apple. Let's have a look at this. So to me, Tesla is almost like and this again is just hypothesizing. I'm quite happy to be wrong when I'm wrong, but I'm always also quite happy to put down a projection on stuff. That's kind of how you make your living. And Tesla to me is a little bit like the new Bitcoin. Kind of everyone's just discovered it, even though it's been around for a while. It sort of hit mainstream consciousness, and therefore it's quite popular. And it was undervalued. I think that it was undervalued for a while, and therefore it's playing catch up, but the correction is potentially going to be quite shocking. So certainly wouldn't be buying any at this point now because, well, if I do, then I have to just be prepared that there could be a bit of a correction, and I would have to hold out through that correction until it regained its value. Apple having had a bit of a correction, I spoke about this last week in a bit more detail, and that's really it. So just going back to that NASDAQ to wrap up, as I said, I'm just, I'm going to be looking for price action. If price action becomes incredibly bearish, or there's a significant one-day drop where I break through a couple of these lows, then I'm going to take that as the signal that potentially the market's going to have a bigger correction on that weekly and all that monthly back down to kind of key levels, back into the kind of where true value lies. That's it from me. Thank you very much. Have a great week.